Thanks for joining us. I'm Marlon Bowling with you as we get deeper and deeper into our election day coverage here of our ag commodity markets. So glad you could join us today. I am joined by Brian Hoops. He's with Midwest Market Solutions in Springfield, Missouri. And Brian, your take on the market activity that we have seen so far today, because we have had some very choppy trade.
Yeah, for the most part, it's been a little firmer here, especially soybeans. There is parts of southern Argentina that remain very dry. And with that dry weather, there's a concern that the crops won't yield to a maximum amount, and every bushel counts right now, as we've seen incredibly strong demand for U.S. soybean products. China has been a very strong buyer, although it's worth noting they've been absent from the United States buying spree since October the 15th. That was their last day that they had actually bought any U.S. soybeans. But demand still remains pretty strong, and our balance sheets are tightening up. With dry weather in South America, that would mean that even more demand would come to the United States if they have some crop loss. So putting a little premium into the market due to forecasts for a La Nina event for South America, particularly in southern Argentina areas. And with the dollar breaking hard today, that is also a supporting feature for the grains and the wheat markets.
Okay, I wanted to comment on the harvest progress numbers that came out from USDA last night. On the national numbers for the corn and soybean harvest, we had corn at 82% done. We have soybeans now at 87% done for the year. Once we get into next Sunday, when they do their next survey out there, it sounds like we're just going to have pretty much wide open weather all across the country. Those numbers are going to be up, in that 90 or better percent range by that point. Is that when the market just completely looks away from the U.S. crop for the rest of this year, and they're just going to focus only on overseas production?
Yeah, we're kind of in that mode where we're turning the attention away from U.S. crop prospects, as we'll probably be 90% harvested in both corn and soybeans by next report, over 90%. In Missouri, there's still a lot of crop to be harvested yet, but not really. It's not a concern by any stretch of the imagination. We've got a lot of time on our side here in Missouri to get that crop harvested, so not a concern there. Weather in South America is going to be vitally important. Export demand is going to be key for price discovery here, but with some strength in the corn and soybeans, looking at the South American weather and hopes that we'll see renewed export business with the lower U.S. dollar.
December corn is 3 1/4 cents higher right now. Let's go back to the full screen. $4.75, just barely hanging on to that $4 benchmark that it jumped up above today. So $4.75. March is up 3 1/4 cents, and it's now at 4.05. In the soybean trade, with these quotes provided by bar chart, January is now 12.5 cents higher at 10.64 3/4. By the way, in case you're wondering, for the delivery intentions on soybeans, we had the number went down to 118 contracts today. Remember, it had been up over 500. So anyway, January now 12.5 cents higher so far. On the wheat, we have Chicago's December contract, 1 1/4 higher at 6.08 3/4. That's still about 8 cents off its earlier high, but it has climbed back to the plus side. And on the Kansas City market, December now 4 higher at 5.57. It's been quite an adventure in this wheat market today. In the spring wheat trade, we have December 2 1/4 lower at 5.53 3/4 in that Minneapolis market. Meanwhile, our cotton is showing December now up 127 points, so it's taken a second run at it today after selling off after the first push. Now we're right at exactly 70 cents per pound. We'll come back in a moment and we'll pick up where we left off, talking with Brian Hoops right after this. We're talking with Brian Hoops of Midwest Market Solutions in Springfield, Missouri. And Brian, let's shift our focus here to our livestock trade. We have had the grain markets surging ahead and then backing off, and then maybe in some cases making a second run here today. Let's take a look at our live cattle market, and I can't wait to hear your take on this. We have December just pretty flat. It's down 30 cents, so a little weak in the knees here. We're at 108.25 per hundredweight. And the February contract down 20 cents at 110.32. General 20 to 35 cent losses across the board here on the live cattle. Meanwhile, on the feeders, a little more pressure, Brian. We have November down 55, but the active January contract is losing 85 cents right now. That's showing the biggest loss. and it's now at 133.20, which would be about $1.25 off of its earlier high this morning. So at that point, it would have been about 40 cents higher. What happened here, Brian, to take the wind out of the sails on the cattle market today?
Well, a couple things. I think the corn market moving higher is pressuring the feeder cattle, and that's kind of dragging live cattle lower this morning. Last couple of days, we've seen some selling early in the session in the cattle market, and then by midday, box beef values come out, and they've come out higher, and that's helped to rally the market into the close. I don't know if we'll do that exact same pattern again today, but we're down just fractionally lower here in the cattle market early this morning. A lot of the trade is trying to decide if the Packers' lack of buying last week, if that's an indication that they really don't need cattle, if they're coming into this week very aggressively needing to buy cattle because they're going to be short bought. So, kind of right now, we're trying to figure out where that cash trade is going to end up. We're already holding a couple dollar premium in the December contract over last week's cash trade, and just trying to determine if that cash is going to take another $1 to $2 move higher. Futures will follow suit as well.
On the lean hog trade here so far today, we have the nearby December contract 52 cents higher at 66.47. February now 70 higher at $66 even per hundredweight. Could there be some spreading going on between the cattle and the hogs right now?
Yeah, that's certainly a possibility. That's kind of been a favorite trade here recently, buying the hog market and selling the cattle up until the last couple of days. That's worked. We could be seeing that trade being put on here once again. We're also seeing a little bit of intermarket spread trade, traders buying some of the deferred contracts and selling the front month hogs as well.
And a very important thing to watch on December Dow futures, now up 684 points. At 27,480, so the surge continuing there. Thanks, Brian, for the time. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Tammy, back to you.